In Remit Trade Academy, we have a whole lot of products or services that we offer to the public. If you check the channel, you see in the description of all videos the products and services that we offer, and these services are actually practical. That means it has result-oriented track records. And then if you are in a WhatsApp group, if you're connected from our WhatsApp group, you discover that this is the 10th WhatsApp group that we are opening. So that means we have more than 1, 2, 3. Okay, so it's a growing academy and a growing channel on YouTube as well. So we offer a whole lot of products and services, and then for the purpose of this very training, and those that will be joining us after this training, we've slashed the price of all our products right down, and I'm going to show you maybe 1 or 2 of them, so that if you're interested, then you can then pick the one you like, and then just stay to the end of the video why, or the training, why I do that. Then if you're watching the video on YouTube, check the link in the description or the WhatsApp contact in the description and reach out to us. Very important. And then if you're also watching on YouTube, don't forget to subscribe to the channel and like the video, also share as well. Okay, so let's get right in. So in today's video or today's training, my name is Paradise, and by the grace of God, I'm the senior trader at Remit Trade Academy. So I'm the senior trader at Remit Trade Academy, and I'm going to walk you through this very section, and it's going to be very interesting, so just stay tuned. Okay, so right now the question is, what is blockchain technology? Because if you actually want to trade cryptocurrency, you must know what blockchain is. But before I say that, this is what I'm going to go through during the training. I've done introduction, we will do blockchain technology, what it is, cryptocurrency exchanges, DeFi, spot trading, how to place a trade, simple trading strategy, and then we'll do Q&A. Okay, so the Q&A section is going to be a very interesting one. I will allow you to talk to me while I answer your question directly. So just pen your question down. Anything you want to ask, just pen it down. At the end of the section, I will give time and room for people to ask their questions. So blockchain technology is a decentralized distributed ledger that records the origin of a digital asset, that is the provenance of a digital asset. That is a blockchain technology. Now a blockchain technology, like I said, is a chain of blocks. Now a blockchain, inside a block, let's say for example you have a block of chain. It has several things that is inside. Number one is the hash of the previous block, the person's data, and the hash of that very block. Okay, now the hash is just like a fingerprint that is unique to a particular block. Now blockchain technology are encrypted, so therefore it is tamper proof. It is tamper proof. You can't tamper with it, and it is an open source system, distributed. Every person or individual on the network can actually access data in the system, and you cannot cheat it. It is censorship resistance. That means you can't oppress it. You can't oppress the blockchain technology. That is how it is being built. So with that knowledge and idea, you discover that the blockchain technology is actually an important industry that the financial space is evolving into right now. And for the purpose that you are aware of the blockchain technology today, or you've been aware of it before, it is the right time for you to embrace it and take advantage of the relevant opportunities that is therein in this very space. Very important. So the blockchain technology is a digital ledger that stores data. Now, cryptocurrency. A cryptocurrency is a digital visual currency that is secured by cryptographic technique. So this makes it almost impossible to counterfeit or double spend. We all know that our normal money, our fiat, which is either United States dollar or naira or Ghanaian cedi, Gambian dalasi, or you have the South African rand, any of those currencies can be reprinted. That is, you can have a counterfeit part of it, but cryptocurrency does not have a counterfeit part of it, and you cannot duplicate it. And the cryptocurrency world have solved the double spending problem that we have with the fiat money, that is the governments of different countries money that has been produced by the central banks. Okay, so the cryptocurrency is a digital and visual currency that is secured end-to-end with encryption. Okay, and these encryption are mathematical puzzles, and then is secured by cryptographic techniques. So cryptocurrency is a combination of cryptography and currency that gives us what we call cryptocurrency. So it's from cryptographic technique, then you add currency. That is what gives us cryptocurrency. So we use it. So the cryptography use its advanced mathematical technique to secure funds so that nobody else can spend them after you have spent them before. Okay, so that is what we call the double spending problem that have been solved using the cryptocurrency. And you have to understand that cryptocurrency runs on a technology called the blockchain technology. So without a blockchain, cryptocurrency will not actually run. Okay, so cryptocurrency is very important, and that you need to embrace the world of crypto today, right now, so that you will be ahead of those that have not heard about the information. And then if you heard of it before and you've not taken it serious, I want to say that you need to take a very serious step about how you trade your coins, how you hold, and then how you actually trade in general, because that is where the world is shifting to. Not only cryptocurrency trading, the world of trading itself is very vast. You talk about forex trading, options, commodities, and stock. These are the possible ways you can trade, but the one I find most interesting is cryptocurrency, because there are a whole lot of technologies that is emanating from it, and you can benefit a whole lot from this very cryptocurrency space. So cryptocurrency is permissionless. The blockchain itself that houses the cryptocurrency is permissionless. Like I said earlier, is censorship resistance. That means no one can oppress it and no one can cut it off. Okay, it has a cheap and fast payment method. We have a whole lot of network this time around that solve the issue of high transaction spending. Let's say, for example, you want to send money from here to the United States, like from Nigeria to the United States, or from Ghana to the United States, or let's say South Africa. Anywhere, it will require some days for that money to get to the destination. But with cryptocurrency, it's very fast. Sometimes within minutes or seconds, that person have received the very coin with the exact amount, and also less fee. So cryptocurrency have solved a whole lot of problem. It's a secured and safe system. So your funds are secured and safe with cryptocurrency technology. Is very, very secure and safe. Unlike when you save your money in a bank, we know that banks are central authority that actually take control and manage our funds for us in terms of saving. Okay, but when we talk about cryptocurrency, it is more secured than when you save your money in the bank, as far as you don't allow your wallet address or your private key to be accessed by anyone, that which may result to potential scamming. All right, so that is that for cryptocurrency. Now, exchange. What is an exchange? We have an exchange is a business, that is cryptocurrency exchange. Now, it's a business that allows users, customers to trade cryptocurrencies or digital currency or other financial assets on their very platform. So when you are doing these kind of exchanges on a particular cryptocurrency exchange, what you are doing is you are actually trading either Bitcoin to BNB, or Bitcoin to USDT, or USDT to Bitcoin, or either BTC to United States dollars, or Euro to US dollar. Anyone, when you exchange this cryptocurrency to another, or to another fiat money, you are actually on an exchange. So we have two major types of exchange in the cryptocurrency space. We have the DEX and the CEX. So this is the types of exchanges, and we have CEX and the DEX. Okay, now the CEX means centralized exchange. Now we have a whole lot of centralized exchange like the one I'll be guiding you through in this very particular section. So we'll be looking at OKEX. OKEX is a very nice exchange where you can trade right here. This is my account, and if you go to this area where you see trade and you go to basic trading, that is spot and simple options, and then if you click on it, it will take you to the interface where you can actually place trades. So right here I can place trade and do all my transactions very perfectly. This is OKEX, and it's one of the exchanges that I'll be using to guide you through this process. And we also have Binance. Binance is the world's most largest exchange ever. So you can also trade here, and it's a very nice and legit, very secure exchange. I've been trading here since 2016 since 2017 when Binance started this very exchange. Okay, so that is that for centralized exchange. So there are characteristics for a centralized exchange to be called a centralized exchange. Number one, a central office, like Binance have a central office, and then KYC is a must. You must do KYC. KYC here means know your customer. Know your customer. So it's a must that Binance will know you to verify your identity, to be sure that you are not a robot or you are not any entity. Okay, they want to be sure that you're a human being. And then centralized exchange have global restriction. We have recently Binance have been facing a whole lot of global restriction from several countries of the world because of licensing and regulation. So one of the disadvantages of a centralized exchange is that they have global restriction in some countries. Then control over asset listing. Now if you want to list a coin on KuCoin or Binance, you must have to pass through the process. They have a process, it's a guideline, a procedure in which you will list your coin. Let's say, for example, you have a coin, your own very coin that you want to list on this very exchange. You have to pass through a procedure or a guideline before your coin will be listed so that it will be traded on the market. Now, no freedom and privacy. For the fact that you are doing KYC, that means this exchange have your data with them. Okay, so there is no freedom and there is no privacy. Also, you cannot just withdraw. If they find out any illegal activity on your account, they have that power to restrict your account from withdrawal and deposit as well. So there is no freedom in a centralized exchange. The next one here is customer support and protection is intact. Now, for a centralized exchange, we find out in these years that they have, most of them have a good customer support system. For example, we have OKEX here, they have a wonderful support system, and also Binance as well. Okay, so that is that, and somehow their system are well protected because they have users and customers' phone with them stored on the exchange. So security is one of their top priority as well. Now they have fair pricing. That means their prices, let's say for example we want to buy BTC USD, their pricing is not intact in the sense that there is no much slippage in the market. There's so-called slippage, that is a distance between two prices. Okay, that's the bid and the ask price, which gives what they call spread in cryptocurrency, sorry, in forex trading. Okay, now so the fair pricing is that if you go to a non-decentralized exchange, which is an exchange like Uniswap and SushiSwap, PancakeSwap, all of those, you will pay a little bit of fee higher than when you are buying on a centralized exchange. Very important. So they have fair pricing. So decentralized exchange, a decentralized exchange are exchanges that don't actually, they don't operate based on smart contracts. Now that's a centralized exchange. So a decentralized exchange are those exchanges that operate on the blockchain. So they use a smart contract. The first characteristic here is that there is no global restriction. So for the fact that they are decentralized, you can actually from anywhere in the world, participate on this very exchange. And we have so many of them. We have Uniswap, we have PancakeSwap, we have SushiSwap, and we have Binance Liquid Swap as well, where you can swap your coin to any token. So you swap from one token to another, and anyone can list an asset. So on a decentralized exchange, you can actually add liquidity by yourself and remove liquidity by yourself. There is no particular guideline to adding liquidity and removing the liquidity from the system or from the exchange or from the pool. Okay, so anyone can do anything on a decentralized exchange. KYC is not required. You're not required to submit your identity, let's say your ID card, and then maybe do email verification or your phone number verification or some stuff like that. You are not going to do that because no KYC is required. Now, less customer support. Now, on a decentralized exchange, with my experience, they have a less customer support system. That is, their customer support are not intact. So therefore, if you have a challenge on a decentralized exchange, you may not have support instantly, unlike when you are trading on a centralized exchange. So they have no several offices, just like I said earlier on the centralized characteristics. Now, render freedom and privacy. Now, when you're trading on a decentralized exchange, you have that freedom to do anything you want and anything you like at any time. Nobody is in control of your money. You can remove your money and add your money anytime you like on the exchange. Let's say, for example, you are a liquidity provider. So you want to actually provide liquidity, let's say, for example, on PancakeSwap, you can add liquidity and remove liquidity without any person's permission, because an algorithm or a program has been designed to control everything based on the smart contracts on the blockchain in which the decentralized exchange is operating. And then they have a considerable amount of high price, that's high price in transaction. So the reason is because we have different pools, and pools in of different coins or token can have considerably high fee, because these liquidity providers that form where you can buy and sell from on a decentralized exchange must be paid. So for the fact that they will be paid, the exchange will charge you, so that these people that provide liquidity in the liquidity pool can actually benefit from the exchange as well, as far as they're providing liquidity. So that is the characteristics of a centralized exchange and a decentralized exchange. You have to understand that they are two different exchanges. DeFi. The word of DeFi is a very interesting one, especially right now in the cryptocurrency space. So DeFi stands for decentralized finance. Decentralized finance. And DeFi comprises of financial applications that are being developed on top of a blockchain system. So DeFi uses smart contract for operation. So it is designed to work just like the financial system, but in this case is decentralized. That means, for example, in the bank is a centralized financial system, but we're talking about a system that is decentralized. That means nobody is actually in control. Let's say, for example, you borrow somebody money, you can actually go and collect that money out of that very particular place or system immediately without any person's permission. That is the advantage that DeFi have actually offered us. Let's say, for example, you borrow someone money, you can go and collect it back anytime you like and receive your commission, and nobody will tell you wait for a while or wait for so time, we are working on it. Bank used to say something like we are working on it. There is nothing like we are working on it in the DeFi world, because it operates on a smart contract, and the smart contract will help the system to run smoothly based on the agreement in the algorithm of this very protocol. Okay, so DeFi is a very nice place to trade and enjoy the decentralized world. So example of DeFi, we have the DEX, that is the decentralized exchange that I talked about, and then we have the dApps, which is decentralized apps. There are so many platforms that is coming up right now that operate on dApps, which is decentralized apps as well. Now, the function of DeFi is creating monetary banking services such as issuance of what we call stable coins. Now, we have a whole lot of stable coins in the market, and I'm going to go through each of them, so stay with me till the end of the section. They also broker peer-to-peer or control lending and borrowing platform. So DeFi help borrowing and lending very simple and easy. It also have or provide advanced financial instruments such as DEX, tokenization platforms, and derivative and prediction markets. So derivatives such as we have the futures market or the options market, these are derivative markets. So DeFi help provide these services, and is a very important space. And this is just a surface of it. If you go in depth of what DeFi is, you will actually understand that DeFi is a very interesting space to actually be in the cryptocurrency world. Alright, so let's proceed a little bit further. Now, cryptocurrency and fiats. Bitcoin is the first ever created cryptocurrency by an anonymous developer, Satoshi Nakamoto. Some history told us that it's a single person, some history let us know that it's a group of persons, but they are unknown. So the Bitcoin protocol that runs on the blockchain technology that gives an eye opener up to the world today is running on the blockchain technology, that is Bitcoin. So Bitcoin is the first ever created digital currency in the world. So you can say that BTC is the father of all cryptocurrency. That's very correct. And Bitcoin, as it is produced or produced just like the bank, reproduce money by a system called proof of work mechanism. And miners, the more miners mine more Bitcoin, the more Bitcoin goes into circulation. Not only that, the system is developed in such a way that it checks inflation and other stuff that is not in our own very decentralized financial system with a mechanism called halving. So halving in the Bitcoin protocol help check inflation and other stuff that is wrong with our present financial system. Now we have 21 million Bitcoin that is to be created. So in the history of Bitcoin or anything, Bitcoin will not exceed 21 million. Once 21 million is reached, that is it. It's not going to increase, neither reduce. That is how it is. Now, altcoins, any coin at all aside Bitcoin is called alternative coin, which is altcoin. That means it's a derivative, is derived from Bitcoin. So even though you talk about smart contract, before now we don't have smart contract. We have only blockchain proof of work mechanism, but now we have smart contract, and most of these smart contracts run on proof of stake mechanism. So you can see that even though we are having an advances of the technology every day, everything can be still traced to Bitcoin and the original blockchain. So any coin aside Bitcoin is called alternative coin, or you can simply put altcoin. Now we have what we call stable coins. Stable coins are coins that don't increase nor reduce in value. We have a whole lot of them on Binance here. If I go to this area and then I go to advance, so I go to advance right here, then if I click on this very area, then I go to fiat, you can see stable coin here, the USDT, we have BUSD, we have another stable coin right here. We have TUSD, which is True USD. This USDC, which is Coinbase USD. We have DIA and the rest of them right here. So these are stable coin. They don't increase or reduce in value. So therefore, for you to be a successful cryptocurrency trader, you must after trading, let's say for example you're a day trader, after the day trading, let's say for example after the day trading you've made $10, you have to convert that $10 into a stable coin. If not, if market keep dropping, the value of your coin will reduce with it. So stable coin is just like a safe haven currency in the forex world. Safe haven currency like the chef and the Japanese yen in forex. So stable coin does not increase, neither do they reduce in value. So it's a place where traders can actually hide their self in times of maybe market dipping or dropping right down. Now we have fiat. Fiat is your normal government issue currency. Fiat is your normal government issued currency. For example, we have the United States dollar, we have the Great Britain pound, the euro, the Japanese yen, Russian ruble, and the Ghanaian UCD, Nigerian naira, South African rand. All of those are fiat. Now, if you are trading stablecoin and fiat in the cryptocurrency market, either on KuCoin or on Binance, you will discover that if you are pairing, let's say for example, you are pairing USDT and Euro, you see that there will be movement. You will see a whole lot of movement on the chart, and you can actually participate and earn from that very particular movement. But if you pair a stable coin to a stable coin, let's say for example BUSD is a stable coin and USDT is a stable coin, if you pair the two together, you won't see movement. So if you are pairing the stable coin to a stable coin, you won't see movement in such markets, so you don't trade such markets. Okay, so that is that on this. So Bitcoin, altcoin, stable coin, fiat currency. All right, look, let's go straight into what the deal of today is, which is spot trading. I'm going to show you how to trade on spot, number one. Number two, I'm going to go further to explain certain things, and then I'm going to go into a brief analysis, a simple analysis that you can use to trade the cryptocurrency market. Very important, so stay with me till the end of this section, and do well to pen your question down so that during the section for Q&A, you'll be given the opportunity to actually ask your question. So spot trading involves direct purchasing or selling financial instruments or assets such as cryptocurrency or forex stocks, options. So when you are doing this, you are actually spot trading. So a spot market is a financial market open to the public where assets are being traded immediately. We are talking about immediate trading. So when they say you are trading on spot, it's just like the thing is happening right now, is going on right now. Okay, so when you are spot trading, you are taking trades right now, is going on. Okay, so that is that for spot trading. So let's say for example you buy, in this case you want to buy Bitcoin using USDT, and you are on the spot market. This OKEX spot exchange. So you're on the spot market right here. You can actually perform this trade and it will execute instantly. I'm going to place a trade here and show several examples as well. So let's move a little bit further. Now, how to place a trade. How to place a trade. If you want to place a trade in the cryptocurrency world, is very simple. All you need to do is to go to the exchange. Then when you go to the exchange, you have to ensure you are on the spot exchange. If you know how to trade on margin or you know how to trade futures, there is some problem, but we are talking about spot trading here. So we have the buy tab here and the sell tab. Now what you're seeing right here is what we call the order book. Now the order book is a list of electronic list of buyers and sellers in the market. Okay, so the red ones here, and they are arranged by price. They are arranged by price. The red ones here are sellers, while the green ones here are buyers. Now this very price right here is the market price, and this market price here is always equal or equivalent to what is shown on the chart right here as well. Okay, so now right here you see buy option and sell option. We have what's called limit order, we have market order, and we have stop limit order and other advanced order as well. Same thing to here on Binance. We have the spot market, we have the buy tab, we have the sell tab right here, we have limit, we have stop limits, and we have the OCO order as well. Now all these types of orders are explained in detail right in the channel, that's on the channel, Remit Trade channel on YouTube. So ensure you subscribe to the channel as well. So types of orders, we have market order. So let me explain this type of order briefly, even though I'm going to send a video that's practically explain this type of order to the WhatsApp group after this training. So market order, a market order is an order you are placing to buy instantly. So we call it instant execution. So a market order is an order you place to buy a given cryptocurrency asset or a given security at the current best available market price. So you're saying, you're telling OKX, I want to buy right now when you're using a market order. So if you place on buy here, market order, and you want to buy Bitcoin, you are saying, I want to buy right now. You want to buy right now. So when you are placing the market order, you are saying, buy Bitcoin for me now. Now for a limit order, we also have buy and sell limit order. So if you put on limit here, we have buy limits and we have sell limits. Now for a limit order is a pending order. So it's an order that allows you to specify the point or the price that you want to buy that very particular cryptocurrency asset. So let's say, for example, in this case, let's say I want to buy at this very price. Let me increase the visibility of this. Let's use yellow. Okay, so let's say, for example, I want to buy at this very price. I can set a buy limit order here, and when market comes down to this place, it will execute. So a limit order is a pending order. So it's an order you set with your own specified price, not the market price. Okay, so you have to understand that if you place a limit order above the, let's say for example you place a buy limit above the current market price, it will execute as a market order. Reason is because above this current market price, or there are a lot of sellers above here willing to sell the market. So if you place a limit order above the current market price, it will execute instantly. Now for a sell limit, the same thing. If you want to set a sell limit, it should always be above the current market price. It should be above the current market price. If you mistakenly set a sell limit order below this current market price right here, where price is right here, that's 34,002, it will execute like a normal market order. Reason is because below the current market price, below this current market price, there are a lot of buyers that will want to buy from you directly. Okay, so it will execute. So when you're placing a limit buy or a limit sell, for a limit buy, it will be below the current market price. Why? For a limit sell, it should be above the current market price. We have stop limit order. The purpose of a stop limit order is to limit a trader's loss on a particular position. So let's say, for example, you are here on BTC USDT chart. You are here on BTC USD chart. What it means is, after your analysis, let's say, for example, you do your analysis here and you discover that, okay, this trade, after it comes to this area, I'm just saying, for example, after it comes to this very level, it's going to go up. So at this point is your entry. So after you enter the trade, you are saying that, okay, from your analysis, if market cross this level, it's still going to go down. That is, after you enter here and market cross this level right down, it's going to go down. So this point is the point of invalidation. So this is your invalidation point. The point where you now say, okay, my initial analysis was wrong, and so therefore I need to exit the market. And what you will use to exit the market is the stop limit order. So when you place a stop limit order at this point and market then go down, it will then execute and sell for you. It will stop you out. That's what it means. So when it stops you out, you are going to lose from where you enter and where you are being stopped out. Remember, if you do not set the stop limit order right here and the market keep going down, you're going to lose much. So therefore, a stop limit order is very important for you to set it when you are day trading. Now, if you're holding a coin for a long time, that means you're an investor or a position trader, you don't actually need to set a stop loss because you're actually holding the coin for a long time and you have a target where you want the coin to get to before you can actually sell off. So a stop limit order is used to limit a trader's loss on a particular position. Remember that you can also use a stop limit order to place a buy order as well. Remember that a stop limit order also have a conditional price, that a condition should be reached first before it will trigger. Let's say, for example, I want to set a stop limit. The stop is a condition price, while the limit is a price that it will execute. This stop is a conditional price that should be reached. Let's say, for example, right here on Binance, I place a trade right here. So after I place a trade, then I place a stop price here. My limit price will be below my stop price. So my stop price here can be, 33,290. Then my stop can be the same 33,287. That is below the stop price, so that it will execute. If you set the limit price above the stop price, the order will be placed, but it will not execute. So you have to know how to set these different parameters, and I'm going to take slight examples. Now, the last one is the OCO order. The OCO order is an order type that helps you do two things at a time. Right here on Binance, we have the OCO order here. So an OCO order means one cancel the order. One cancel the order. That means if one order executes, the other one will automatically cancel itself. That's what it means when you're placing an OCO order. Very, very simple. Very, very simple. So right here is the first price. Now the first price here, let's say for example I have BTC in my account, and then after I buy BTC, I will come and set OCO order. Let's say for example in this very case, I want to sell my Bitcoin at this very price, and then this is where I want to be stopped out, and then I can also say, okay, I buy at this very price. So after buying, let's say for example I use a normal limit or market order to buy first, and then after I buy, I come and set a OCO sell order. So how will I set it? I will set this price right here above, is called the limit maker price, and you're going to fill that in the first column here, and then your stop price. Remember, this is your entry. This is your entry where you enter the market. Now your stop price here, which is 33418, will be here, and then your limit price will be below, slightly below your stop price. Your limit price should not be above your stop price. If not, it will not execute. Your trade will be placed, but it will not execute. The market will come to that area and it will go down. I have a lot of questions from several students. Why is my trade not executed? The market have passed that level. I said, check your parameter on your settings on your OCO order. There is a video I released on my YouTube channel, that is yesterday, on how you can use the OCO order buy to buy assets. It's a very critical one, but if you get the understanding of what actually is going on here, then you can also use it as well to buy and sell. So the OCO order, the main purpose of OCO order is so that if market is going against you, it will stop you out the same quantity. If market is going in your favor, it will take profit for you at this level. So if for example market move in your favor, it will collect the profit for you at this point where this is your entry, this is where you buy it, for example. Then immediately this is trigger, the first is trigger, this other one right here will be cancelled automatically because they are dependent on each other. They are dependent on each other. So right here, if this one is triggered first, that is the OCO order is triggered, the stop limit is triggered first, the limit maker order will also cancel itself. That is how you place a OCO order as well. I'm going to still give you a link to the video that explains Oco Order very well, or you can check Remit Trade channel, and then you know the video is already there on the channel. So let me go ahead and place order in the market. Now right here, I can simply, if you want to buy Bitcoin, it's very simple. First of all, you have to deposit your phone either through cryptocurrency or any fiat, and then if you can go here buy. Then if I want to use a market order, which is an instant execution, I will simply, let's say for example I want to buy Bitcoin, I want to buy 50 USDT worth of Bitcoin. So right here I will simply go and click buy Bitcoin. Remember, I'm using the market order. Market order, I'm saying buy for me instantly. That's what it means. So if I go down here and say buy Bitcoin, this confirmation order will pop up, and then I will just confirm. So once I confirm my order is successful, I've already bought Bitcoin. If I go to the sell tab, you will see my Bitcoin that I buy right here. See the Bitcoin right here. Okay, so if I want to sell it back, I can equally sell the Bitcoin back as well. So you can, if I want to sell it back, I have to put it on the sell tab, market order, and then I will come here and put 100. I want to sell 100. Then right here, I can just click sell. The confirmation order will pop up, and then I will click confirm. It has sell it back for me. So for me to get this. Now, one thing very important, when you are trading, you must actually know the market you are trading in. Like I said earlier, the spot market here, right here. And then if you are trading BTC USDT, it means that you are using USDT to buy Bitcoin. And if you are selling Bitcoin into USDT. So therefore, the one on the right, listen attentively, the one on the right, the currency on the right here, is what you're using to buy the currency on the left. Why, when you sell, you are selling the currency, that's the cryptocurrency on the left, into the one on the right. That's what you're doing when you're buying and selling on spots. So you must know the one you are actually doing in this very case. Remember, we are actually on spot trading. Now, if you want to set a limit order, let's say I want to buy Bitcoin at, if the price comes to this very level, that is 33,000. So I can simply go to limit, remember on the buy tab, limit, and then I'll click here, 33,000. That is the price I want to buy Bitcoin, and I want to buy 50 USDT worth of Bitcoin. So I'll simply go here, click buy. This confirmation order will come up, and then I'll click, and then my order is placed. If I go right down here, since it's a limit order, you will see it right here. Pending for when price will come to 33,000, it will execute. It will execute. That is a buy limit order. Now, one thing very important as well, you have to understand that when you place a market order, there are some exchange that will tell you limits. We have the maker fee and the taker fee. If you are taking buy or sell order with a market order, you are a taker from the market. That means you are taking liquidity from the order book. So when you place a buy or sell market order, your trade does not reflect in the order book because it's an instant execution. You are taking the liquidity out of the market immediately. So you are a taker from the market, either buy or sell, and you're using the market order. Very important, don't forget that. Now, if you are using a limit order or a stop limit order, OCO, any other order at all that is a pending order, your order will be placed in the order book. Like this one I just placed right here is already in the order book. Pending for when price will come to this very level of 33,000 USDT for it to execute and buy $50 worth of BTC for me. Okay, so what you are doing when you place a limit order, you are a maker. You are making the market. You are making liquidity. You are adding liquidity into the market. That is what you are doing when you are taking a limit or any other pending orders in the markets. So this is how you set a pending order or a limit order. I can go here and cancel the order, and then it will be cancelled and my money will return back to my balance. All right, so let's say for example, if I want to trade on Binance right here, and then I come to this area, and then let's say for example I want to use, let's say I want to trade XLM BUSD. XLM BUSD. So if I bring this chart right here up, and then I want to place a trade, remember I'm on spot, and then I want to use the stop limit. Remember, you can't place a stop limit on something you don't have, but I can also use this a stop limit order to place order on this very platform. And if even though it's above the current market price, it will not execute, even though I'm using a buy order. Let's say for example you want to buy high. I know nobody wants to buy high, but sometimes from your analysis you can analyze the market and say, okay, if the markets go up, let's say for example if there is a breakout from this area, let's say if there is a breakout from this area, I want to buy. So you're going to set a stop limit order for buy above this level. You can also set a stop limit order for buy below the current market price. Okay, so let me go, for example, if I want to set a stop limit order, first example for buy, right down here, what I will do, I will choose this price, which is 0.25 as a stop, that is 0.25 as a stop, and then the limits have to be below the stop price. The stop price is a condition price, don't forget, and then the limit price is the price that it will actually execute into the order book. Let's say I want to buy just there's $50 worth of XLM, $50 worth of XLM, and then I will go here and place buy. So this confirmation order will come up if the price, if the last price drops to or below 0.25 BUSD, an order to buy 208.3 XLM at the price of 0.24 BUSD will be placed. That means this 0.25 is the trigger condition. Is the trigger condition. That is a condition that should be reached first before it will now buy at 0.24. So I will click confirm. Once I click confirm, my order will be placed right here. You will see the order is placed right here. The condition that should be reached is this 0.25. So you see trigger condition 0.25. So when market drop down, you can see this order right here, take profit. You see right here, if the market come back down and hit this price, when the condition is reached at 0.25, it will then place the order at 0.24 into the order book for a buy. For a buy. Remember, I'm using BUSD to buy XLM in this very example. So I can go ahead and then cancel the order. Can go ahead and cancel this order right here. So I'll cancel the order, and then if I want to place a buy above the current market price, remember you can't use a limit order to place a buy above the current market price because it will execute as a normal market order. Take example from the one I just explained. So let's say for example I want to use a buy limit, stop limit to buy these very assets at above the current market price. Now what you do is that you have to set the stop limit, that's the stop price right here, below, and the limit price have to be above, because we are expecting the market to come back up. So when the market come back up, it should first of all hit the trigger condition. Okay, if the trigger condition is not reached first and it reach the limit price first, it will not execute. Market will pass here and it will not execute your trade. That is the mistake most traders that don't understand how to set this make. So let's say for example, if I go here and let's say this is where I want to buy. From my analysis, I want to buy at this level if there's a breakout. So right here, I will place 0.27. So here 0.27, that's what I want to buy. This is the conditional price. Now the stop price have to be 0.28. 0.28 or 0.29, anyone above. Okay, and if I want to by 50 worth of BUSD, this trade will execute. If you use year as 0.28 and the limit is 0.27, it will not trigger. Your order will be execute. It will be here under open order, but it will not execute when market comes to that area. Reason is because when the market is going up, we expect the market to hit the stop price first, which is the conditional price, before it will now hit the limit price. I believe this explanation is clear. So right here, I will go ahead and place this order, and then my order, they bring this confirmation order as well. I'll go ahead and click confirm, and then my order will be placed. You see, this is the conditional price, which is 0.27, that will be reached first before an order to buy 50 BUSD worth of XLL at the price of 0.28. Now, if you look at on the chart right here, you see the price that is right here. So when this market go up and price come to this very area of 0.28, it will buy for me when the conditional price is reached at 0.27. I think this is self-explanatory enough for you to understand. Don't set it the other way around. Don't put 27 here and put 28 here. It will not execute when market come to this area. Very, very simple and self-explanatory. So that is how you set these kind of orders in the markets. Alright, so I will cancel the order and then I will move further to the next one. Now, this type of order, which is OC order, you have to go to the channel, Remit Trade channel right here, and then you just need to watch this very particular video on the channel. It will help you. It's a new video I just upload just few right here. Just go to Remit Trade channel right here, and then you get the video right there. Okay, so OC order, like I said earlier, is a order one cancel the order. So if one is reached first, the other one will cancel itself. So that is how you place an order in the cryptocurrency market using different order types. I've taken example using the OKEX platform, and then I've taken example using the Binance Exchange as well. Simple trading strategy. I think this is one of the reasons why we are here. Simple trading strategy. If you are new to trading, I will simply say this, very important. Don't do what you don't know. It's just like you want to get into a business that you have little or no idea about. You will never be successful. That's just it. The reason is because we've seen a lot of students that have made a lot of great mistakes as a result of not properly having the education or the right knowledge on how to trade. One thing very important is that you cannot go on YouTube and know how to trade excellently well, except you have someone that is actually guiding you, either within your vicinity or someone you're following online that is guiding you through on how to trade. So you must follow a simple methodology for you to know how to trade very well. So if I go here, and then let's say, for example, I want to show you a very simple analysis on how you can do a simple analysis and take trades. So right here, I'm on OKEX, and then I'm on Trading View, not original, on Trading View, and then I have all the tools here on Trading View at my disposal. Right here on OKEX, I want to use an indicator called the Stochastic Rsi. So I will go right here, see indicator, and then I will use the Stochastic Rsi. So Stochastic. Okay, so Stochastic Rsi here will be my chart. So all I need to do here is to increase the visibility. So if I increase the visibility right here, increase the visibility, Now what you do is you leave the input first as it is, leave the input first like it is right here, and then if I bring this a little bit up here, okay, all right, so I think this is okay. This is okay like this. Let's say for example's sake. Now if you open your chart, first of all, when you want to do a simple analysis, I know this class is very short and time will not allow me to go through detail on how to start doing analysis and all that, but the first thing you have to do before taking any trades in the market, any trade, I said any trade in the market, is simply you have to identify the direction of the market. So if the market is going up, creating what we call higher highs and higher lows in the market, then this is a higher high, this is a higher high, this is a higher high, and this is a higher low. So you have to define the trend of the market. So these are higher lows, while these are higher highs. So when market is moving in this vein, in this direction, we say the market is going up. Market is actually moving up. That is an uptrend. And then if market is doing the opposite thing right down, let's say market is moving right down in this formation, we say market is going down. So this is a higher low, this is a lower low, this is a lower low, this is a higher low, this is a higher low as well, this is a lower low, this is a lower high, and this is a lower low. So when market is moving like this down, we said market is moving in a downtrend. That is the second market structure. We have what we call sideways market or ranging market. When market is moving sideways between two horizontal boundaries, we say that market is actually moving sideways. So the market is drifting to the right horizontally. When market is drifting to the right horizontally, we say that market is moving sideways. And there are ways you can trade a horizontal or sideways market. But for you, as you're just starting up, you have to identify the structure of your market. The first thing you do for an uptrend, you have to identify whether you're seeing higher highs or higher lows in the case of an uptrend, and then lower highs and lower lows in the case of a downtrend. Then you can now seek for buying opportunity. In the case of spot market, I'm not teaching futures trading here. I'm not teaching futures trading. And for example, and for purpose of emphasis, you must have to master your sports very well before you can go on futures. Futures is a little bit high risk platform than sports. When you're trading on sports, the risk is low compared to when you're trading on futures and margin. All right, so right here I will remove all this on the charts, and then so if I am using the stochastic right here, and then on this very market, this is BTC USDT chart, and then I'm on the 1 hour chart. Now these are candlesticks. What you're seeing right here is called candlesticks, and the red ones here are seller's candle, what we call the bear candlestick, while the green ones right here are bullish candlestick or buyer's candle. So you can simply put a bullish candle is equal to buyer candle, or equal to buy, equal to long. So when you say you long the market, you are saying that you buy. Now seller's candle are bear candle. So you can say bear equal to seller's candle equal to short. When you hear somebody say I short the market, it means that they sell the market, and you can only short on the futures market and when you're trading on margin. So take that very, very important. So when you come right here, the first thing you do when you're using the Stochastic Rsi is to identify the direction of your market. Let's say, for example, this market is going up, it's an upside market, and then we want to trade. Now the Stochastic Rsi, let me explain how to use this indicator very well. From this area where you see 80% line here, this 80% mark on the Stochastic Rsi to 100 is the overbought condition. the overbought condition. Why from 20 here to 0 is oversold condition. I repeat again, from this area, which is 80 to 100, is overbought condition. From 20 to 0 is oversold condition. Now, this blue line and the red line is a simple moving average. Now, the blue line is a simple moving average compared to the red ones. That means the red one is a heavier simple moving average compared to the blue one. That is why the blue one will move faster than the red one. I'm not going detail into what moving averages is and the period and all of those stuff. Now, right here, when this very blue line and red line enter into from the 80% to 100, this is overbought condition. Sorry, this is overbought condition. Now, at overbought condition, what happened? Now, when the blue line and the red line enter into overbought condition, it's simply saying that the market has been buying. If you look at it from here, from this area, market has been going up. Market has been going up. If you look at the chart here, market has been going up. So when the blue line and the red line enter into the overbought condition, it means that market will soon go down, soon or immediately, either of the two. When this blue line and the red line enter into overbought condition, it means that market will soon go down soon. That is, go down or immediately. That's what it means. When this blue line and the red line enter into oversold condition, it means that market has been selling. In this case, no indicator is perfect. No indicator is perfect. This is a consolidation, but market was not going down, neither was it going up. So this just consolidates around this area. But for this very example, when market comes to this very area and is coming down, market is supposed to go back down, and then at this area, it means that market will soon go back up, soon or immediately. That is when the blue line and the red line enter into the oversold condition. So overbought condition means that the market has been buying and sellers are going to take control of the market soon. Why oversold condition means that market has been selling right down. That means bears have been in control of the market and the market has been dipping right down, and the indicator now enter into oversold condition. That means buyers will soon take control of the market to the upside. That's what it means when the indicator enter into oversold condition. Now, a simple strategy on how you can use the Stochastic Rsi to trade markets is this. Listen attentively, very important. Now, for the fact that market is entering into oversold, overbought, just like that, does not mean that anytime market come here, you buy. Anytime this thing cross here, you sell, you short. Maybe you short right here, or you buy right here or long, or you buy right here or long, just like that. No, don't do that. Don't trade like that. I know maybe most of you are just starting up in trading. That's an amateur way of trading. When you're trading, there's what we call a strategy. When you develop a strategy, in Remit Trade Academy, we advise that all strategies must have a good entry, a stop loss placement, and a take profit target. These are components of a good trading strategy methodology. You must have this in check if you want to actually trade the market and be profitable. If not, you will be experiencing series of losses. All right, let me explain more further what this means. So if the market is going up, listen attentively, market is going up. In the case of spot trading, that is what we are doing today. Now, when market goes up, allow the market to come down. Let the market come back down. Now, when the market come back down right here, you are expecting the Stochastic Rsi to come into oversold condition. When it's coming out of oversold condition with the blue line crossing the red line above the 20% mark right here, the 20% line right here, is when you're placing your buy order. Very simple. In this case, we see the market just go down a little bit. The market was in an uptrend. Market was going up. So when it come back down,
the stochastic RSI is already at oversold, which means market will soon go up. So when it crosses this very line, 20% line, that is when you should take your trade. You should take a trade in this area around at the close of this very candle for the market to go up. You would have made profits if you take this trade here. Let me see another example. If I scroll this chart right up, let's say in this case you could have taken this trade, this one and this one as well. So the strategy is very simple. All you need to do is, when the market is going up, coming back down like that, you allow the stochastic, in the case of maybe the market is retracing down at this point, when the stochastic RSI is at oversold, about coming out of oversold, the blue line on top of the red line, that is when you should take your trade. Now, if the market comes to this area, don't take trades. If it's here, don't take it. If it's here, don't take it. The reason is because it's not at this very oversold region. Please, when you are trading with a strategy, if you say you develop a strategy is not something that is very abstract. It's a condition that should be reached. If this condition, it may be 4 conditions, it may be 5 things you're looking out for. If those things obey in the market, I'm going to take a trade. And in that trade you are taking, you must have to set your stop loss, you see your entry, and your take profit targets. After these conditions are being met or reached, that is a strategy. Nothing different than that. The reason why I'm talking like this in this very section is because you can actually go to Binance and navigate through Binance maybe in 2-3 days or few moments of navigating through the platform. But you see trading and be successful, it may not be that easy, especially when you're just starting up and you don't have any person to guide you. Remit Trade Academy is here to guide you till the very end to make you successful. That is why we actually organize this training for you, to take you to the next step. Being a profitable, successful trader is just a step ahead of you from today. Okay, so when the market goes up and the market enter into overbought here, is when you are selling off what you buy at oversold. So when market enter into overbought, you sell off and relax. When market come back down again, it must enter into oversold. You take another trade again around this area. Market goes up, enter into overbought, you sell off, come back down. This should enter into oversold again. You buy just like that. If it does not, if market come back down and the stochastic RSI does not enter into oversold, don't buy. That's the strategy. In this case, we're supposed not take this trade, even though market was slightly moving back up. The reason is because the stochastic RSI does not come into oversold condition. We're supposed not, after we define the trend of our market, very important, you must actually define your market trend before you place any trade in the market or use the stochastic RSI, which is the indicator we are using for this very example. So right here, if you check the current market condition, let's say you want to trade here. This is BTC USD chart and you want to trade right here. You see, this market is going right down. We are in an uptrend. Market is going up. This market is going right down. So you are supposed to buy when the market comes back down. This market enter into oversold condition. Coming out of oversold condition with the blue line on top of the red line, that's when you should take a buy. When the market goes up, enter into overbought condition right here, you sell off, collect your profit and relax. Now, other advanced technique will let you understand that you can still trade without the indicator, which is what we teach very well in Remit Trade, because indicators in themselves are not perfect, like inherently perfect. There are flaws because it's designed by humans, and so therefore it has errors. It does not work perfectly. So that is how you do a simple trading strategy on Binance. Now, one more thing, very important. One more thing. Listen attentively. The Remit Trade Academy have put together a course. We have beginner course, advanced course, and mentorship. From beginning of trading, you know what the candlestick infrastructure is. You know how to do everything when it comes to cryptocurrency space. Beginner course to advanced course and mentorship. We've put together this course for you. And the purpose of this training is so that you can take advantage of the class that will start this next week, Sunday. A new class is going to start next week Sunday for this very particular group 10. So you have to opt into the training and get trained perfectly. Now, what we do here is to guide you properly from the very basic foundation to being an advanced trader. Not only that, you have access to cryptocurrency job. You must not be trading to be profitable or to earn money from cryptocurrency. There are jobs that you can get access to through our own platform, Remit Trade. We have partners with Binance, OKEX, and other platforms as an academy. So therefore, we've put together a course that will help you trade profitably. Now, and we have discount offers on all our courses right now for this very section. So these are the discount offer for beginner course. For if you're in Nigeria, just 15,000 naira, and it will take you 1 month and 1 month for that training, 2 days per week for 2 hours maximum. And then we have advanced course 35,000, and then both course and mentorship. Both course and mentorship is 50,000 naira. Now, if you take this course, that is both course means beginner course and advanced course, it will gain you access into our VIP signal group. Let me show you that group right here. We have the VIP signal group right here on WhatsApp. Everything we do here is very transparent and simple. We have the VIP signal group right here. This is the VIP signal group, Remit VIP signal group, and I give this trade right here before I come to class. So this is the VIP signal group, and we have a whole lot of successful traders right here. You see traders right here. Let me allow this to load a little bit. You see result-oriented trades. So join us. When you take this, our course, both course and mentorship, if you take only advanced course or beginner course, you don't have access to VIP signal group except you want to pay for it. But if you take this both course and mentorship, you have access to it. Now, if you are our students, be it in beginner course or advanced course, we will still give you signal. We don't leave you alone. For the fact that you don't have money to pay for both course and mentorship, we won't leave you alone. We'll also take care of you, give you signal, and ensure you are profitable. Now, for those of us that in advanced course, that will opt into the advanced course or both, we have a very nice and very interesting advanced class group right here. These are my advanced students, and there are a whole lot from all over the world. So join us. We have the capacity to make you a successful trader. I mean it, and I can show you results all over. Okay, so right here is our both course and mentorship. Like I said, it's 50,000 naira for Nigerians. Then now, if you are a foreign student, beginner course is 80,000 at discount price, if you can see right here, and then the advanced course is 150, while the both course and mentorship is $220. All these, either of the course you're taking, is what you need for a step ahead of you to know what the market actually is. Now, remember, we have curriculum. It's not that we are just training you. We have curriculum for all our courses. We have curriculum for all our courses and timeline. So when you join us in our cryptocurrency class, this is our curriculum. Now, all this information will be shared with us in the WhatsApp group. This is the curriculum for our beginner course, and then we have the curriculum for the advanced course. I will send this curriculum into the group as well, so that you take a look at it and see it as well. So everything is detailed down for your success. It's a planned course, well arranged for your success only. Remember, this is the home of successful traders. Now, one more thing, if you are a trader If you are a trader and you are finding it difficult to succeed, you're not successful, you are struggling to succeed, you can just pay for these services, the Signal Group services, and you get access to this VIP group I just show you right here. And it is subscription based. It is subscription based. This VIP group right here, this group right here is subscription based. But if you are our students that go through all the courses, you have access to this group for I think 3 months or 6 months or thereabouts. So you can take this subscription base 1 month, 2, 3 months, 6 months, and 1 year. So these are the services we offer. We also offer account management as well. Now, having said that, I'll go back to our class for today, and then I will take questions. So right here, you don't take this trade until this market come here, enter into this region, and then come out of it. That's when you're taking a trade. After you've defined the direction of the market, that's the first thing you're doing. You define the direction of the market first before you now apply your Stochastic Rsi, and you are buying only when it's at oversold condition. If it's near oversold condition, don't buy. The strategy is not like that. Obey the strategy and you will get results. It's very simple. Now, like I said earlier, the best way to trade the market is using simple methodology called simple price action, which you analyze a chart without any indicator, like this, as you're seeing it. And that is what the courses are all about, where you can be a trader. Because if you say you're a trader and they did not give you indicator, and let's say for example there was no indicator in the market, can't you trade? It's just like you say you're a footballer and you say you can play on one selected pitch, or there is certain kind of football, like if a ball that you will play, like you are selective. If you are a trader, regardless of indicator, that's what we do in this academy, regardless that you have indicator or not, you should be able to trade. Regardless of robots or not, you should be able to trade. You should be able to trade on your own, even though you are using indicator. Indicators should only serve as confirmations. They should serve as confirmations. The reason why you should not follow indicators strictly is because they are being programmed to follow the market condition. So they are doing what the market is doing. They are not ahead of the market. Very important. Indicators are not ahead of the market. Remember, we have two types of indicators: lagging indicator and leading indicator. Lagging indicator lags behind the market more than the leading indicator. The leading indicator is telling you what the market is doing right now, while the lagging indicator is telling you what the market have done before. Example of leading indicator, we have the Stochastic Rsi, the Stochastic, and others. Lagging, we have the MACD, the parabolic sack, and others as well. The reason is because most of you will start using one particular indicator, let's say for example the Bollinger Band, and you start seeing series of losses. Indicators were meant to be confirmation for your trade, for your entry, and not you actually depending on them. If you depend on them, you will not see result. Back in those days in 2016, when I started trading, I was following what we called the MA. That's the moving average. We can call it the simple moving average. The person that taught me said, I think it was a crossover. So if you see a crossover right here, MA, if you see a crossover right here, then I can just come here and change this format to 20. Let's say change this to 20, these settings, and then let me change it again. Then I'll change the style. Let me give it yellow. And then let me increase the visibility of this as well.
Sorry. Okay, what I was told was this. Anytime you see a crossover, you buy. For example, in an uptrend, if you follow that methodology, you're going to lose all your money. The time is coming, you will probably lose all your money, because especially when you're just starting up in the market, when you just see a crossover, you buy. See a crossover, you buy. Maybe year, you'll be tempted to buy as well. Then when this coming year, you also want to buy around this area. If you follow it like that in an uptrend, a time is coming when this guy will start misbehaving at some point. If you don't have a proper understanding of the market, I'm talking about demand that you understand what candlestick is, candlestick patterns, chart patterns, what is resistance support level, what is trend lines, momentum trading, all of those, breakout, strategies, volume trading. You have to understand certain things as side indicator. Order flow, how orders flow in the cryptocurrency space, where you use your order debts. You have to understand this stuff. You have to understand it for you to know, okay, where there's a buy war, where there's a sell war, and for you to take proper advantage of the market. If you don't do that, you may not be successful. What I'm saying is that don't depend on indicator holistically for your trading decisions. It should be based on price action and your strategy. Your indicator should be a confirmation for you to enter the market. So thank you very much for being with me in today's section. I so much appreciate it. I believe you guys gained something. At least you can place a trade. You know what cryptocurrency is, stablecoins and all that. This is time for Q&A. If you have questions, simply unmute. Don't make it rousy. Simply unmute and ask your question, and we'll go straight and answer your question in the next 20 minutes.
Hello?
I can hear you. Go ahead. Yeah.
Good evening, and thank you very much for your wonderful lecture.
Thank you.
Yes, the first question is what is the difference between USDT and BUSD?
Okay, USDT is USD Theta. This is USD Theta. Let me remove this from full screen. It's USD Theta. Put it on. That's USD Theta, while BUSD is Binance USD. Remember that all stable coins are being pegged to the United States dollars. They are just like a dollar, but now in a coin form. Are you getting it now? In a coin form, but it's a dollar. So anything that the dollar is doing on the forex market, on the stock market, that's exactly what BUSD, USDT, USDC, TUSD, all of them, that's what they're doing. But they're different US dollar that run on different networks. This BUSD run on the BEP20 network, that is the Binance Smart Chain. While USDT run on the ERC20 protocol, that's the Ethereum network. So the difference is that they run on different protocol, and then they are both US dollar. This one is Binance USD, while the other one is Theta USD. I believe I've answered your question, right?
Okay.
All right.
Okay, thank you very much. Number two.
There's no problem. Go ahead.
Hello, sir.
Go ahead
Okay.
and ask.
Okay. What are some risks in spot trading?
Now the
Likely
risks.
risky.
Okay. The risk in spot trading is this. When you are trading on spot, you are buying low in anticipation that the market is going to go up, right? So when market goes up,
Yes.
you sell back. Now when you are selling, let's say for example in this case XLM BUSD, you use BUSD to buy XLM at this very price. Market goes up, that means XLM increase in price. You now sell back the XLM into BUSD. Remember, BUSD is stable coin. That means if this
go down again, that the price of XRM go down again, you've already collected your profit. So the risk is, if for example you take a trade here and market does not go up, now go down, you will be losing. You'll be losing the value. Now, cryptocurrency is important and simple to trade for me compared to the forex market. I've traded the forex market, even stocks. When the market is going down right here, you are not losing, the money is not evaporating from your account just like it happens in forex. You are losing the value. The quantity is there, but the value is going down. So let's say, for example, you buy 2 XLM at $50 at this price. If it goes down, the value will no longer be $50, it can be 30, but you are still holding 2 XLL. Are you with me now? So the value is reduced, but the quantity is the same. So the risk is that if the market goes down against you, you will lose the value of your coin while the quantity is still there. So that is what we say, when you have a strategy, you must, all of our students all over, you must have a stop loss. When you are trading, when you are holding, don't bother about setting stop loss because you're holding for a long time. So that is the risk involved. Okay.
Thank you very much, sir.
There's no problem. You're welcome.
Next matter. Is there any advantage in holding one's coin for, let's say, 6 to 24 months?
Yes.
Not minding the market situation.
Yes, yes. In this space, holders are millionaires and billionaires. Holders. When you buy a coin low and you hold it for a long time, that's a long-term investment. So you're actually investing for a long time. That time, you don't bother about analyzing, stressing about how to analyze the market and all that. You actually hold. When the market goes up, when the coin increases in price, you sell off. So there is a huge benefit in holding. It saves you stress of doing analysis up and down, and your return profit can be very, very huge. But you must ensure that you are buying very low. Don't buy the dip, so-called, and the dip will be deeper. Don't do that. There are strategies in trading the dip where we reveal in this academy as well.
Okay.
All right.
And lastly, thank you, sir. Lastly,
be very fast with your question. Others can ask.
Okay, lastly, taking the course, is it still on a Zoom? If somebody subscribe to your courses now?
Yes. We have videos for our courses that back up our Zoom practical training. All our training is done via Zoom practically so that we demonstrate and you see what we are doing in practical terms. And there are videos that are attached to it, especially our beginner course have videos attached to it. After the Zoom class, we also have recording of all classes. All our classes are recorded. So in case you have network challenge and difficulty in connection, you can always watch the recording of that very particular class when you are online. Okay, so that is how the academy is arranged. Thank you very much. The next person, very fast.
I'm done.
Yeah, go ahead. Yeah.
Good evening.
Evening. Thank you.
Hello. In this
go ahead. Words.
I'm having a cracking network. In this future trading, what's the actually I don't understand the difference.
Your network is breaking, and you have the network is breaking. And the next person, please. Yeah.
I'm asking about the difference between long and shorting.
Okay. In features, when you are longing, you are saying market is going to go up. It's just the same thing as buying. When you long on the futures contract, let's say you are trading on the futures and perpetual futures contract. If you come to the derivative and you go to either with this or this is a futures market. When you are longing, you are saying market is going to go up. Okay. Now, when market go up, you make profit. If market come down, you lose. When you are shorting, you are saying market is going to go down. Okay. When market come down, if you say market is going to go down, you will make profit. If market goes up, you lose. So long means buy, while short means selling. You actually make money. One thing about futures is that you make money while the market is still going down. But in sports, you only make money when the market is going up. In futures, market go up or down, you make money. All you need to do is to be in the right direction of the market. That is, your prediction should be right. Now, you must not have 100% predictions all the time for you to be successful. If you can have 70%, 65% prediction, you will be successful. Because from the law of compounding, you must be successful in the process. All right, the next person. Wisdom, go ahead. Wisdom, go ahead. I can hear you.
Thank you very much for the explanation.
Hello, good evening.
Evening, thank you.
Hello, good evening.
Good evening, I can hear you. Go ahead.
I sincerely appreciate the information you provided. I'm more concerned on the courses.
Okay.
The courses and the mentorship. And if I want to be part of those courses now, am I going to do the same one?
Okay, we allow instrumental payment for just the both course and mentorship. This is that is this very course right here for Nigerians. This very one we allow instrumental payment for this one. But if you are going for beginner course, or advanced course, it's one time. You have to pay at once. This is 15 and this is 35. So for this, you can break the money down into two parts.
So how am I going to do my payment?
Yeah, we will send the account number to you on the WhatsApp line, or you also contact Remit contact for you to do the payments. Everything will be given to you in the group, or if you're watching the video on YouTube, you can always check the link in the description. You see a WhatsApp contact there, and you contact us as well. The next question, please. Let's move on.
Good afternoon.
The next person, yeah. Evening.
Good afternoon.
Afternoon. Evening. Yeah.
Please, can you hear me?
I can hear you clearly. Go ahead. Yeah.
Okay. My question here is, I really say thank you for this information.
You're welcome.
I want to ask you that, how can we, please just help me explain? It seems I don't get that one very well. Please, how can we set a stop loss for buy order as well?
For buy orders?
Yes. Can we set a stop?
Yes. Now,
really
remember, listen to me now. Let me explain. In this academy, that's what I do, and my colleague. Now, see, this is what you do. When you can't set stop loss on what you don't have. Are you getting it now? So when you say you are setting a stop loss on a buy order, you can't set stop loss on what you don't have. So if you, let's say for example in this case XLM USD, you must first of all buy it first and have it in possession. So when you have it in possession, you can now go to the sell tab and set a sell stop loss.
Stop loss.
Yes, under it. So that even if the market go down, it will sell for you in little loss. The loss will be between where you enter and where your stop is. So that's what you do.
So,
yeah.
Okay, I want to get. So if you are buying straight, it is when you want to sell. That is when you can set. Thank
you very much.
All right,
yes.
Thank you. So my second question
go ahead.
Here is that OCO.
Okay, OCO order.
Order cancel order.
Okay.
One common order cancel order, yeah.
Go ahead.
So this, I don't understand the OCO as in the settings, the way you.
Like this OCO, there is no time. If I'm supposed to take an example, there is no time, but I will send you a video on the channel, Remit Trade channel, and then you watch the video well explained. If you still have any questions, you can still come back and ask. I will explain.
So please, how can we now get the video for this one we just do?
It will be on the channel after this class. Let's say tomorrow or latest Monday. It will be available on the channel.
On the Telegram
on the YouTube channel.
YouTube. Okay.
Yeah.
Okay.
Yeah.
All right. Thank you very much. Please don't forget the one that you say you sent to me. Is it on the channel that I will get it on?
Send it on the general WhatsApp group.
Okay. It is the one that you just create now. This recent one.
No, the WhatsApp group group 10.
Okay. Thank you very much.
No problem. The next person.
You want this particular OCO?
Good evening.
Good evening. Thank you, John. Go ahead.
I wanted to ask about the overbought and oversold you are talking. Then I have a network break,
So I want you to share more light concerning, because you said when about the oversold, that is when we can start our trade. So that we can, so I want you to share more light. I have a network break then.
You can always watch the recording as well to get a detailed explanation of everything, since there is no much time. But let me just go and explain a little bit further. This is Stochastic Rsi on Binance. I said if market is going up, first thing, if you want to take a trade using this indicator, is you must have to identify the structure of your market. You must identify it. So if the market is going up for spot trading, you are looking to buy at the end of retracement. At the end of retracement, there are parameters in our courses that will show you how to know the end of retracement. So at the end of retracement, when market go down, you are looking to where the Stochastic Rsi enter into the oversold condition. Coming out of the oversold condition with the blue line on top of the red line, and it has to cross the 20% line here, this dash line here. It has to cross it, going up. Allow the candle to close and then enter the market on the next candle. If this come down and this does not enter into oversold like this one, don't take the trade. You are only entering when it enter into this. For example, this case, you're supposed to take this trade. This is an uptrend. If you take this trade here, this area, that's when this cross this place. That's at the close of this very candle, which is the beginning of this one. You should make profits with this strategy. Very simple. Very simple.
Yeah, thank you.
So that is that. Yeah. Any other one?
Hello.
I would like to ask a question.
Ask a question.
All right. I just want to know if the futures market and the margin will be added to the training that will be organized.
Yes. The futures markets and margin will be treated in the advanced course. Which, if you take both course and mentorship, you will be taught how to trade futures and spot. If it's the only beginner course, we teach only spot trading for our beginner students. They should be proficient in spot trading first before they trade futures. Yeah.
Okay. Also, I would like to know, at the end of this training, can I use the same skill in the forex market too as well?
Yes. The thing is, I am a full-blown forex trader. That's where I started from. Okay. So the skill sets in technical analysis only can be still applied in the forex market, but when it comes to fundamental, they are different. That is why you cannot just look at what is doing here and do what is happening in the forex market, because the fundamentals in forex is different from the fundamentals in cryptocurrency. In forex fundamental, you must visit sites like Forex Factory or investing.com, and then you must pay attention to things like the CPI, the maybe Federal Reserve interest rates, and GDP, and maybe non-farm payroll, all those stuff. Fundamentals in forex different from fundamentals in cryptocurrency, so you must consider fundamentals. But when it comes to technical analysis is the same. So the methodology in cryptocurrency technical analysis will also can be replicated in the forex market.
Okay. Hello.
Okay.
Go ahead. Yeah.
Hello. Yes. Sorry, I have like two questions.
Go ahead, TJ.
Okay. The first is it advisable you trade with a PC?
Yes.
Or mobile phone?
Either PC or mobile phone is okay, but the PC, the advantage is because the PC give you a broader interface, like a large interface. Okay. Now this large interface help you do analysis. You see this tool, you can't see it on mobile. You can see few tools on mobile. So the PC give you a broader interface where you can do your analysis and perfect it and go and play straight. But the mobile have flexibility. It has flexibility. Next question.
Okay. Sorry. And the next question is what is the disadvantage, or can one experience loss when you stake a coin?
Yes, you can actually experience loss when you stake your coin, in the sense that if you stake coin that is not a stable coin and that coin is dropping, the value of that coin will reduce. But if you stake a stable coin, you will not experience losses.
because a stablecoin is a stablecoin. It does not increase, nor does it reduce. Are you with me now? So if you want to stake a coin, we advise use stablecoin. But if you know a particular coin is going to increase in the future, or you're holding a particular coin for a long time, you can also stake that coin since you don't bother about market volatility.
Okay.
Yeah.
Okay.
Yeah.
Sorry, my last question.
Go ahead.
Sorry.
No problem. Go ahead.
You have 3 subscription. I don't know the name, but I know you have 3 subscription. The first, the second, and the third.
Yeah.
Now, if one decides to go with the second subscription, and later on one decide also to go for the third subscription, that is the 50K, if I'm correct.
Yeah.
Yes. So let's say I opt in for the second subscription, then later I decide to go for the advanced subscription.
Okay.
Would it still be at that rate of that 50,000?
No,
or will I have to just add the token?
Yeah. You just have to add the token. That's all we do. You just have to add it to be part of us.
Okay. Thank you.
No problem.
Okay. Good evening.
Go ahead. Yeah.
Someone can only place a stop loss when he has bought an asset.
Yes.
I don't know. What if I want to buy an asset at a limit price?
Okay.
And I won't be on the market. So is it possible to set the limit, set the stop loss, and also set the target?
Is it possible to set the stop loss and set the target?
Yeah.
On something you don't have, or on something you already have? That's the first question.
On someone to buy on a limit.
No. You can only set a stop loss on something you have already. Like the question I answered. You can only set a stop loss when you have something in possession. Are you with me now? You can only set a stop loss when you are in possession of something. When you're not in possession of that thing, you can't set a stop loss on that. So you can use the stop limit order to buy and sell. It won't act as a stop loss. It won't act as a stop loss when you want to use the stop limit order to buy. It won't act as a stop loss. But if you use it as a sell order, which means you are selling what you already have, it can act as a stop loss for you. Did I answer your question? Who asked that question? Is it Shigun or so? All right. Any other one? Any other question? Any person in the class? Any question? You have any question to ask?
Yes.
Okay, Billion, go ahead. Billion, go ahead.
Okay, my question is, can you hear me?
I can hear you clearly, Billion, go ahead, yeah.
Yeah. My question is, if you want to place a trade,
okay,
that's maybe you are a beginner,
okay,
and want to place your first trade. So what method, is it stop limit that is the best as in method to use as a beginner, or should you just go ahead and just place the trade just like that?
Okay, as a beginner,
yeah,
the type of order,
first trade.
Yeah, the type of order you are using depends on
your
type
of order that is best.
Yes, there is no type of order that is best. It depends on your analysis and what you want to do. This one, if you want to sell right now, you use a market order. If you know that you want to sell maybe above or below, you use a limit order or a stop limit order or an OCO order, depending on what you want to buy or sell. Now, if you're a beginner and you don't know how to set this order, you can simply go to buy and go to market and just put in your amount and buy directly without setting any price. This is the easiest type of order. Are you with me? The market order is the easiest type of order for beginner to place or to use in buying the market. Yes, that's the easiest.
Okay, that's it. And why I'm asking the question is that so that as a beginner, you know how you kind of minimizing your loss since you are not that's your first experience. So the kind of order that we place that at least even if you are losing, you still have little of your money so that you can not another I just place and all of it maybe have not been too as in good in maybe your technical analysis and all that. So that is why I'm asking the question.
See, if you're a beginner and you're not good in technical analysis, there is no how you can limit your loss on a position that you don't set a stop loss on. Either the market does not know whether you're a beginner or not. That one is for you.
That's why I'm saying.
Yes.
the
Yes.
kind of order
So,
that you place.
that's
That
what
you
I'm
are
saying.
a kind of.
That's what I'm saying. That you can only set a stop loss when you buy this asset. So you can, as a beginner, you can place a market order buy, and then when you get the asset, you can now place a stop loss using the stop limit order under a sell tab. Or you use the OCO order. I said I will send a video to the group where you can use the OCO order to set a stop loss and a take profit target at the same time. With this, if market go against you, it will stop you out in a small loss. If it go in your favor, it will also execute in profit. Even though you are not on your screen, you are not on your chart, you are not in the market, and you go out or go and do something or something like that.
Hello, sir.
Thank you.
All right, thank you. Go ahead. Yeah.
Hello, sir.
Yeah, go ahead. I can hear you. Go ahead.
What are some examples of
Somewhat? Sorry.
Hello?
Precious, go ahead. I can hear you. Precious, go ahead.
Okay, good afternoon. Good evening.
Good evening. Thank you.
Please, I want to know. I was one of your video and you talked about time frame. What is the perfect time frame to predict trades? What time frame? Is it a 1 day time frame? No, to analyze
your market.
where the market is going.
Okay. Now, these are questions that people ask several times. There is no perfect time frame. That's one thing you have to know. There's no perfect time frame you can use to analyze your market the best. It depends on the kind of trader you are. So in the course, we'll be teaching you how to identify yourself and what kind of trading style that fits you. So it depends on your trading style. That will depend on the time or the kind of time frame that you will use. If you're a scalper, you should be looking at using the 1 minute chart, 5 minutes, and 15 minutes. If you're a day trader, look at using the 15 minutes, 1 hour, and 4 hour. If you're a swing trader, look at using the 1 hour, 4 hour, and 1 day. If you're a position trader, look at using 4 hour, 1 day, and 1 week charts. So these are the time frame are categorized depending on your own trading style. It's not that this is the best time frame, or for you to be a swing trader, you will not go and look at the 15-minute chart, or for you to be if you're a scalper, since you are looking for entering the market in and out very fast, you can't go on the higher time frame like 4 hours to look out for position, because on that chart the market is actually dull. So you have to be on the 1 minute, 5 minutes, or 15 minutes to take your scalping trades. So it depends on your own trading style. That's what will determine the time frame you will use. So if you're a day trader, you want to sit on your screen and trade throughout the day, you use 15-minute charts. 1 hour and 4 hour is for you. Any of those?
Okay, sir. Thank you.
You're welcome, Precious.
Please.
Hello, sir.
Yeah, I can hear you. Go ahead. Yeah.
Is it all coins on Binance that are stable?
No, not all coins on Binance are stakeable.
Unstable ones, sir.
No.
Some examples, sir.
You say?
Don't mind. Can you give us some examples, sir?
You said, is it all coins that are what? Sorry.
Example of stable coin, sir.
Example of stable coin. Example of stable coin, we have USDT, BUSD, TUSD, USDC, PIA, that is BIA, and DIA, and the rest of them. These are stable coins. Not all coins are stable coins. A lot of coins on Binance are not stable coins. We have just few stable coins. Yeah. But the most popularly used stable coin is the USDT. USDT is the most popularly used stable coin. So you can also trade that as well with any other pair in the market. All right. Any other question?
Yes, sir.
The next person before we end the class. Next person. Precious, do you still have questions? Do you still have questions?
No.
Okay. Any other one?
Good evening, sir.
Good evening, Solomon. Go very, very fast about your question.
Sir, please, is there any difference between a token coin and a a token and a coin?
Okay, now yes, there's a difference between a token and a coin. If you check the channel, this very channel, Remit Trade channel, ensure you subscribe to it. You will see a video where I do the difference between a token and a coin. A coin, one example I want to give you here is that a coin operates on its own blockchain. A coin operates on its own blockchain. A coin can also be used as a method of payments, transaction. Now, a token does not operate on its own blockchain. It operates on another blockchain. So its protocol is being launched on another blockchain to run. For example, of blockchain, we have the ERC20, that's the Ethereum blockchain, or the Binance blockchain. That is the Binance Smart Chain. So a coin operates on its blockchain. A coin does not operate on its own blockchain. Rather, it runs on another blockchain. A coin can be used as a method of payment, but a token cannot be used as well. So these are a few examples I can give right now. The next person. Okay. Solomon, is that okay?
Sorry, I also yes, I also have a question.
Go ahead.
Which platform do you suggest for the exchange, the OKs or Binance? Which is more reliable?
Okay, Binance is the world's most largest exchange, and they are trusted by millions around the world. It's a very nice one. The both exchange are nice. That's just what I can see. The both are nice. OKEX or Binance. Use anyone that you like. The link is in the description of this video or in the WhatsApp group. You can do a registration as well through the link and get some commission when you pass through the link. So either one, they are best. They are good. They're okay. They're okay.
Okay.
Hello.
Yeah, go ahead.
Based on this time day, or one can choose time that suits him or her.
Priska, I can't hear you. Can you repeat the question again? Sorry.
There's a specific time of the week, or time of day. One can choose the time that is suitable for him or her.
Yes. If you're a day trader, that means you should be trading within the day now. You should be trading during the day, that during the London section. And you maybe enter into the United States section, maybe if you're using the stock markets or the forex markets.
That's not what I'm talking about.
What are you talking about?
That's not what I'm talking about. For the paid training.
Okay. The training is always in the night, like that is from 7 a.m. to 11 p.m. in the night. 7 p.m. to 11 p.m. Within that duration, within that period, we'll fix the training within that period of 7 p.m. to 11 p.m. So it's convenient for everyone. If you are working, you come back from your work, you can still join us. And you can also have recording for the training if you miss out, if you miss it.
Okay. And concerning the Binance trade, is there something here that you shouldn't trade during the weekend or something like that? Volatile. Can you explain, please?
When it comes to volatility in the cryptocurrency market, you can experience volatility anytime. During the weekend, the reason why people say don't trade during the weekend is because maybe you may not see a lot of volatility in the markets, especially in the forex market, because maybe some people are on holidays or people are going on weekends and all that. But in the cryptocurrency space, either weekend or not, market is always moving. So there is nothing like don't trade during weekends, and that thing always apply in FX, forex trading, where by Friday yesterday the market closed, so you don't see volatility. Traders are not in the market, so you won't see volatility in the market, so everything closed down. But in cryptocurrency, even on Saturday and Sunday, market is still running, so that does not apply here. We trade 24/7, that's 7/7 in a week, 24 hours in cryptocurrency.
Okay, thank you.
No problem, you're welcome. Anyone? Any other question? All right, so at this point, thank you very much for joining me in this very section. I so much appreciate it. This is Remit Trade Academy. the home of successful traders. So if you want to be really successful in trading, join us, take our courses, or you can also go through our YouTube videos, our YouTube channel, and there are some important videos there that can help you as well be a better trader. Don't forget to subscribe to this channel and then turn on the notification bell and like the video. So thank you very much for being with me in today's section. I so much appreciate your time, your efforts, and the way you guys ask questions are very, very awesome. The way you guys moderate yourself, maximum decorum was observed in the class. I must appreciate that. I can now see that we have mature minds in the class. So thank you very much. And those of you that will opt into the classes or the courses in our academy, you are welcome, and I'm expecting you to start your class by Sunday next week. Thank you very much for being with me in today's class. Now, all the links to the different maybe Binance, on the raise on Binance or OKEX, you check the description of the video, or it will be sent to the WhatsApp group. You register and do your registration, and you get a commission on it, because Remit Trade Academy is a partner with these different exchanges. Thank you very much, and God bless you guys.